Good morning, everyone. Daddy Trade Buy is here once again, and I'm going to review the trade I had yesterday before FOMC report release on May 7th, 2025. Here you can see the daily chart over here that I'm going to highlight the pertinent levels that are used and utilized in this trade to me. You can see the market has reached to this sell side imbalance, buy side inefficiency over here. It traded up above that. It has a close above it and tried once going lower and reached to the consequent encouragement of the inefficiency. After that, we had a quite good retracement towards the top of the daily fair value gap. And this was actually, in my opinion, acted as an inversion fair value gap because we have closed above the market and had a retracement to this inefficiency, and now we have a run higher. And to me, these two candles over here are quite obvious that they have a lot of buy side liquidity over here above these two highs. So saying that, we are jumping to the 15-minute chart. On the 15-minute chart, we can see that on April 30th, we do have a very big run above the market, and here we created this buy side imbalance, sell side inefficiency. That is a fair value gap in 15-minute chart from April 30th, and you can see the market has traded above it, and we had a very nice one, high and down, up and down, and we traded back to the upper portion of this inefficiency over here. After a very nice reaction, we traded above and above again, and this is happening on the NFP days last week. So in Monday, we had a kind of consolidation over here. On Tuesday, once again, we traded lower to the upper portion of the fair value gap and just fell short to touch the consequent encouragement of this 15-minute BC. Then we had a very nice reaction going higher, clearing this buy side liquidities over here, and after that generating. And today's trading session, after opening at 6 p.m., I highlighted the new day opening gap low, and there is also the new day opening gap high, that is the settlement price. I apologize because this is not settlement, this is the closing price at 5 p.m. New York local time. And here you can see the market has traded in first 15 minutes very high and created the high of the day over here after clearing this relative equal highs of previous day's trading. And after that, I had a very slow run going lower and lower. And you can see over here I highlighted 9, 9:30 and 10 o'clock with these lines over here. So we do have this type of reaction from the market after opening bell at 9:30 over here. You can see the market was trading up and down. We will see this in lower time frame, but the important thing over here to me is that here we do have a 15-minute breaker that is formed over here, high, low, and higher high, and these two down close candles are my 15-minute bearish breaker. So I'm trading back to the I'm going back to 5-minute chart, and just remember that we do have an inefficiency over here in 15-minute chart that is resting above the consequent encouragement of the daily fair value gap. In the 5-minute chart, we can see that we do have a breaker block from 15 minutes, and if you go back to 30th of April, you can see we have a down close candle that is formed in the run higher, and that is our order block, and I extended that candle to the right, so we do have this order block sitting over here that is also below the daily fair value gap consequent encouragement and below the 15-minute BC. So we see that after the market opened, the market first traded a little lower, and after that went higher to clear this buy side liquidity over this single low, and also tapped into this CB in 5-minute chart. After that, we had a very nice reaction and started rolling down to touch the new day opening gap, and during the lunchtime we were gyrating and consolidating in the between the new day opening gap levels, high and lows. This created the minor sell side liquidity over here and another relative equal lows over here that we jump into 1-minute chart. We will see this is our sell side liquidity and my point of interest. Now we jump into the 1-minute chart, and over here I'm showing from the morning session. On the left side of the chart, we do have the first presented fair value gap form over here that is a type of BC, and I extended that to the right. The market has traded below that and didn't respect it as an inversion fair value gap, so it immediately came back and went above it with a close. Once again, the market came down after 10 o'clock and touched the high of the first presented fair value gap and had a kind of good reaction going higher. But you can see there are a lot of overlapping in the price action over here and very small candles resting over here in the 15-minute bearish breaker, saying that we around 11 we have a very nice run going lower to the top of the new day opening gap, and after that we were consolidating in over here. So around 12:30 we started a run going higher to the midpoint of this 15-minute breaker. You can see the bodies of the candles are respecting this level and the wicks are allowable to go higher, but the bodies are respecting the lower portion of this 15-minute breaker. We trade back and we have spent a little bit time inside the first presented fair value gap of the day. After that, in the PM session, that is starting 1:30 p.m., we started going down and we created the first presented fair value gap in the PM session over here. You can see the market went down and reached to this buy side imbalance, sell side inefficiency over here, had a kind of retracement back to the first presented fair value gap, and the market is respecting the lower half of the first presented fair value gap, even barely reached to the midpoint of it. So after that we had a very nice run going lower, and once we closed above this BC over here, I was expecting it acts as an inversion fair value gap in 1 minute chart. You can see over here we had a very nice reaction and respecting the levels, the midpoint and the low point of the first presented fair value gap. And after that we had a sell-off going back to the 5-minute order block, and that is resting below the consequent encouragement of daily fair value gap and 15-minute PC that I mentioned earlier. Now I'm going to show you the executions on this trade. On the top left chart you can see my first entry that was at 19,864 and quarter. It was based on the idea between these two candles we have a volume imbalance, and the entry was happened at the low of the volume imbalance. After that I put my stop loss somewhere around here and I allowed the market to get back to the first presented fair value gap in the PM session. And you can see in the second picture on the top right I have the second entry at 19,877 and a quarter. That is a little bit above the lower half of, a little bit above the low of the first presented fair value gap. And you can see the bodies of the candle are always staying in the lower half. Only there is 1 week happened to the consequent encouragement of that. And after that immediately we traded lower. And you can see in this candle, in the third picture that is in the bottom of the slide, you can see at the filled position, that is my buy limit order over here at 19,847 even, just resting below the consequent encouragement of this inversion fair value gap, and I got exited from the trade by this run over here. The funny fact about this trade was when I was placing my stop loss below this low, the market actually jumped over my TP and didn't fill my TP. So I had to move my TP to the lower prices. I mean, I get more profit, of course, but I had to do this to get filled in the market because the market was very volatile and it was skipping my position target over here. This was the trade review of May 7th, the day of FOMC, and I wanted to thank you for watching this video, and do not forget to finger the like and subscribe buttons below. Daddy Trade Pie YouTube channel over here is always available for you to talk to you another time. Be safe and happy trading.